Good morning, good morning, good morning. Welcome to the Miami-Dade Chamber of Commerce and the SBA Community Navigator Program Technical Assistant Workshop on a next level business. We are excited for you to be here today. Um, this workshop is a part of a series that we're doing on the next level. Last year, we did a series on the ABCs of business. And we wanted to really talk about the foundation, getting your bookkeeping together, your business plan, business operations. And now this year, we want to take it to the next level. What do you need to do to get your business together so that you can start to step it up a little bit? And we are excited about today's presentation. But first, I want to tell you a little bit about the Miami-Dade Chamber of Commerce and also the SBA Community Navigator Program. I want to ask for and feel free, this is a networking opportunity. So for those in the chat, make sure you say good morning, put in your business name, your contact information, what industry you're in. Let people know who you are as we get the PowerPoint rolling to the next slide. So feel free to say hello for those that are on Facebook. Be sure to join us online. You can click the link to join the Zoom and ask questions. This is one of the very few times that you will have an expert, many years of doing taxes for small businesses, nonprofits, governments. Our speaker today has experience on so many levels. So we're excited to have her. And this program, that we are here today, is a partnership between the Miami-Dade Chamber of Commerce and the SBA. The SBA last year put together a community navigator program throughout America. And it came out of the American Rescue Plan Act that was passed in 2021 that really provided millions and billions of dollars to communities all over the nation, not only to assist governments, to people, but also our business community. And this particular program is based at a hub with the FIU's Small Business Development Center, and then it has 6 spokes. We at the Miami-Dade Chamber of Commerce is one of those spokes where we work with businesses to really get their business startup together. And this funding that we receive is for Miami-Dade County. We go to the next slide, and it's targeted towards those low to moderate income businesses, Black, Hispanic, minority businesses. So we are here to provide that one-on-one small business technical assistance to business owners that reside in Miami-Dade County. So if you're veteran-owned, women-owned, LGBTQ, we are here for you to provide one-on-one small business assistance. And along with that one-on-one technical assistance, we also provide these workshops to help you understand a little more detail in certain topics. So we are one, as I said, of many others. We are a part of a consortium. And as part of our consortium, we're able to provide wraparound services. If you need assistance with taxes and personal taxes, we have branches. If you're Hispanic and you want more of a connection to Hispanic business, we have Prospera. If you need access to capital, we have Ascendus. If you're looking into getting the government support, we have the startup procurement. So we have these wraparound services to provide you with consultants who could help you with your QuickBooks, help you with your marketing, help you with government contracting and your business plan. So that's what we're here to do today, is to talk more about your finances. Is stepping up your business. One of the very core things that we know as business owners, we have to pay the government. And as a business owner, you're in a unique position to be able to leverage the tax laws, because here in America, they incentivize business and entrepreneurship. And as a part of that way of incentivizing people to start businesses, grow and develop businesses, and create jobs, government has tax codes that you can take advantage of if you're handling your business right and making sure you're documenting all your things. So today we have Jerry Lazier, who's the president of Tri-Merge Consulting Group. I think for over 30 years, she's been doing this work, working with small businesses, nonprofits. She is one of those pillars in our community that's really been taking advantage of many of the opportunities as a small business owner and being able to assist other small business owners to grow their business. So without further ado, Jerry, you want to join us on here and take it from here?
Sure. Good morning, everyone. Thank you so much to the Chamber for having me to present during this next level business series workshop. I think it's a great way to provide technical support to the community, to the business community, and I'm happy to be presenting on how to maximize tax savings to help your business grow and develop. So I will be sharing my slides and we will begin. It's a lot of information, so I'm going to try to go through it and give time for you guys to ask as many questions as you can. Okay.
Awesome. Sounds great.
Okay. So you guys can see my slides?
Not yet.
Okay, great. Can you?
Not yet. Not yet.
Not yet.
Share your screen.
I thought I was sharing it. Share. There you go.
All right.
You guys can see my slides?
We can see your PowerPoint. You may want to start the slideshow.
Yes, I am. That's what I'm going to do now. Where's this slideshow? There you go. We're ready. So again, thank you for inviting me. Let's get into it. So Tri-Merge Consulting Group, we've been in business for a little bit over 19 years. We celebrate our 20th anniversary this upcoming August. So we're really excited about that. Outside of just providing tax planning, support, and strategy, we also provide accounting and bookkeeping services. We provide fiscal agent services for nonprofits. We do financial management work. We also do some financial and audit compliance work for different grants and different programs. We also provide outsourcing and staffing services in the accounting and finance area. And we're also a government contractor in the local and federal space, as Matthew spoke about earlier. So really the theme of today is really how to take your business to the next level. Well, one of the things that I always say in order to really scale your business and really be successful is really understanding the rules of the game. So it doesn't matter if you're accessing capital or if you're trying to buy insurance or you're trying to determine what's the appropriate price to set for your customers, for your products or your service, you really need to know the rules of the game. And so today we're going to talk about the rules of the game with respect to taxation. We're going to talk a little bit about business formation, which I think is really critical in terms of maximizing tax savings at times. We're going to talk about record keeping, access to capital, talk about some tips on financing, as well as tax tips that you can take advantage of and some of the changes that took place in 2022 that's going to affect you going forward. So business formation, we get this question a lot in terms of, what type of structure should I create for my business? And I think the real answer to this really depends. It's not a one size fits all. It really depends on what kind of business that you have. And I would always suggest that you speak to an attorney first, as well as someone who's proficient in taxation. Not everybody's proficient in taxation, so make sure it's somebody who deals with businesses and taxation to get a good idea or understanding of what type of business you should set up. And I will say that throughout the life cycle of your business, your formation may change. I mean, even with my company, we initially started off as a multiple member LLC, but then over time, we became an S Corp. So be okay with the fact that the business may change the entity structure over time, and that's okay. Which business structure is the best for you really depends on what you're doing. I think if you have a hot dog stand, then maybe a sole proprietorship is the best strategy for you. If you own a lot of real estate, which you see is really big nowadays, maybe an LLC structure is the best structure for you. And people sometimes, I notice, create corporations when they first start out. I would say that a corporation is really set up for in terms of the tax rules is set up for large scale businesses like a Home Depot or the Walmart or the Amazons of the world. I think if you're a small business, the better structure tends to be the S Corp structure or the sole proprietor or LLC structure. Again, it depends on what you're doing, how many partners you have, and what's going on in your entity before you decide which entity you should form. Don't just go to Sunbiz if you're in the state of Florida and select corporation and create a new company. Definitely speak with somebody before you go through the process of creating the entity. Another thing that I think is really crucial, and I like to share this slide with people, is understanding the tax rates. I think a lot of people come to us and they say, well, how much am I going to owe? Here's my 1099, here's my W-2. Before we even prepare the tax return, they want to know how much they're going to owe. And that's really difficult for someone to decipher because we have a graduated tax system. So we really get taxed in brackets. So if you look at the slide that I have right here, if you're a single filer and your business, for example, generates $50,000 in income, well, if you look through this, you're actually going through the tax brackets. So $50,000 of taxable income is taxed a certain way. The first 10,000 of it is taxed at a rate of 10%. The next 10,276 between 41,775 is taxed at a 12% rate. So again, it depends on how much money you generated, which bracket that you're falling into, and also what's your tax status. So for example, you're married filing jointly, your tax rate is going to be different from somebody who's single. So I just wanted to add this in to know that it's very difficult for someone to just tell you what you're going to owe in terms of your taxes without going through the tax bracket, and also without actually going through the return with you to see where you actually fall. And I would also say for businesses, keep in mind that the income tax is very different from the self-employment tax. The self-employment tax is a tax that you actually pay on wages, which is in addition to the income tax, which we can talk about a little later. I would say the biggest tax savings tip that I can give anybody is record keeping. In fact, this is where we see a lot of businesses fall short. It doesn't matter if you're a startup or established business. We've seen big and large, large and small companies fall short of good record keeping. So I will just say that the IRS encourages you to keep good record keeping. In fact, it's Section 6001 in Internal Revenue Code, which provides a lot of the general rules on terms of keeping your records so that you could maximize your tax savings. And what normally happens when you don't keep good record keeping, we find that at the end of the year, when it's time to do the tax return, most people can't find the receipts. Maybe they want to deduct all of these expenses that they had during the year, but they're paying everything with cash. And they don't have the receipts. So they have no tracking of how to account for the transactions that they had for the year. So invest in a credit card, invest in a bank account is what I tell most businesses. And it doesn't matter if you don't want to use an electronic system, go to Office Depot or one of these supply companies and get a ledger and track it manually if you're not really proficient with utilizing some kind of software. Get some file folders so that you can keep track of the receipts and the records that you have. And what are some of those things that you need to keep track of in order to be able to have these deductions? Well, the first thing I would say is payroll is the biggest piece that I see for most businesses. And I would say invest in a payroll company. And if you decide not to go with a payroll company and you hire an accountant or a bookkeeper or CPA, make sure it's somebody who specializes in payroll processing, because not everybody does. And I think that's very crucial to the process. Employment records, keep them for at least 4 years or more. Get a business bank account or credit card, as I mentioned a little bit earlier. Track your receipts with your customers through a receipt or invoice process. And if you're paying vendors, keep track of the invoices and keep track of proof of payment. Another issue that we see a lot in terms of problems with maximizing your tax savings is incorrectly categorizing people as independent contractor versus employee. That seems to be a big area where we see a lot of problems. And I would say if you're confused on how to categorize someone, go to the IRS's website. They have a section on independent contractor and employee where they kind of tell you about how you classify an employee. And I would say that 9 times out of 10, if you're controlling the person's time, you're providing them with the tools and equipment to be able to do their job. More than likely, they're not an employee and not an independent contractor. And what we found over the years is that when you misclassify someone as an independent contractor, if the IRS finds out down the line, what they will do is they will go back and they will recalculate the Social Security, Medicare, and the taxes that were due, and you will have to pay both the employee and the employer's portion if you are the employer and you miscategorize. The other thing I would say is invest in a relationship with an attorney, banker, insurance broker, and a CPA, and hire a good accountant or bookkeeper. The last thing I'd probably mention here is track your miles. I think that's very crucial for small businesses, especially if when you look at the rate that the IRS is allowing, they're allowing 65.5% for every mile driven. Just keep in mind, if you have 10,000 miles for your business as an example, that's almost $6,550, $6,550 as a deduction, so that can be tremendous for a business. And make sure that you're doing training such as this to be able to get the technical knowledge that you need to better move your business forward. Here, I'm basically not advocating for QuickBooks or Sage, but I'm basically just saying, and as part of the whole record keeping process, invest in some kind of software to be able to help you manage your business. We see a lot of businesses trying to go after capital, and that's a great idea, right? Use somebody else's money to be able to start your own business and then pay the taxes, right? So you're never really using your own money to be able to manage the business. And that's a great strategy. But the thing about it is that when you're trying to access capital, keep in mind, you got to have a strategy in place. The years that you think that you're going to try to access capital, that's the year that you need to show more profitability, more cash flow. So that's not a time where you want to have a bunch of tax deductions. You actually want to probably accelerate your income and reduce your expenses in the year where you're actually going after capital, so that you can show that you have profitability and good cash flow to demonstrate to the lender that you can actually pay back the loan. One of the things that we tend to see a problem is commingling of the business and the personal transactions, and seeing a lot of the personal expenses inside of the activity of the business. Problem with that is that when you're commingling so many personal expenses inside of the business, when you try to go after capital and they're looking at your profit and loss statements or your financial reports, they see all of these expenses, and what that is doing is not showing the true health of the business, because you're putting all the personal expenses in there. And it's also not allowing you to show that the company actually has good cash flow and is profitable. Normally, when you go after capital, they'll want to see traditionally either 3 years of tax returns, either business and personal, and they'll also want to see your profit and loss statement. And if you have good record keeping, then you'll be able to produce that profit and loss statement with ease. And if you're using a software, it makes it easier, because the software can produce the profit and loss statement for you as well. And what's important here is that they do sometimes compare the tax return to the profit and loss to see whether or not you're actually tracking everything appropriately. And also keep in mind that the IRS can verify the tax return by submitting a transcript request to the IRS. It's a 4506-T form, where they'll try to corroborate what you have on the tax return, because I've seen at times where what is submitted for the financing sometimes is very different from what is being reported back from the IRS. So just keep in mind that they are looking at that. Again, here we're just saying not to commingle your business and your personal, so that you can get a good, clear picture of the health of your business. And this right here, I think, is so critical. I wanted to bring it up one more time. We see a lot of leakages in businesses, and a lot of fines being paid to the IRS because of reporting of payroll, or the lack of reporting of payroll. So I implore you to hire a company, maybe not ADP, even if it's Intuit, or if you go to a bookkeeper, hire someone that can help you stay on top of submitting those quarterly forms, the 941s, the 940 forms, the unemployment tax forms, the state unemployment tax forms. And keeping in mind that just because you're submitting taxes to the IRS at the federal level, keep in mind that you also have to submit forms to the state at the state level, because you have to pay unemployment for your employees. We see a lot of companies not submitting their employment taxes on time. And what happens is that the IRS can charge you up to 10% in terms of penalties, or more, because obviously they charge for interest and late fees over time. So now we're going to jump into tax tips, right? I just want to give a warning here. Keep in mind that every deduction that you think is a deduction is not a deduction if it's not for the benefit of the business. If it looks like it's personal in nature, it is not deductible. Make sure that you keep adequate records. I mean, sometimes people come to us with their profit and loss, and obviously we're not responsible for your accounting if we're just doing a tax return. But if you ever get audited, you have to verify the numbers that are on your tax return. So just keep in mind, you want to keep adequate records and a good paper trail to be able to substantiate the audit. I mean, I think once we had a client that was audited for their business miles. Lucky, we were able to help them track the business miles, and they were able to pass the audit successfully to be able to push forward through that. Lobbying expenses, political contributions, fines, penalties, kickbacks are not tax deductible. I get asked that question a lot, so I thought I'd just bring it up. Let's get into some of the tax savings. And these are some of the topics that come up routinely in many businesses that we work with. And so obviously I wanted to share some of them with you. So business meals. Are business meals deductible? Yes, they are deductible. But it depends. And not every meeting or deal is going to be deductible. Normally it's 50% of your business meals. However, there are some special rules. For example, if you're in the transportation industry, like if you're a trucker, or if you do mass transit, the rules is 80%. And entertainment costs are no longer deductible. I think that's really big for a lot of businesses because entertainment used to be deductible, but there were some rule changes recently that changed that rule. One of the things that we tell people that is deductible are meetings. So for example, if you're having an office meeting with your team and you have food available, obviously that is deductible, and that's deductible at 100%. So really you want to kind of categorize or set the meeting in a way where it's business in nature. You have an agenda. I think that's one of the things that we try to tell a lot of clients. Maybe create an agenda. If you're going to really have a large meeting and you want to have food and beverages available, have an agenda of some sort to be able to justify that it was actually a business transaction that forced you to have this meeting to have the food and beverage so that you can have it as a deductible item. The other thing that we see that's big, do you travel? Can you deduct it? Yes, of course, if you travel for business, it is deductible. However, keep in mind, if there's some personal travel along with that business travel, then it may not all be 100% deductible. We also see a lot of people trying to deduct gifts. The IRS only allows you to deduct $25 per person per year, and it has to be a business-related activity. Vehicles. So vehicles is an area where we see everyone wants to deduct their vehicle. Can I buy a vehicle? Can I deduct it into my business? Well, do you need your vehicle for business use? If you do need your vehicle for business use, then of course, the mileage and perhaps the cost associated with the vehicle is deductible. And you have to pick between two methods. You could either do the mileage. If you do the mileage, you cannot do the actual. Okay, so you can either do actual costs, which is and depreciation, or you can do mileage. You have to pick one or the other. Here, I'm just sharing with you guys that the rates changed during 2022. I think mid-year, it went from 58.5 cents to 62.5. And of course, this year it's 65.5. And the rates are different for medical, moving, and charitable miles. So it just depends. Should you deduct your business vehicle? Should you deduct your vehicle under your business? I have a vehicle. Did I buy my vehicle under my business name? No, I didn't. Why? Because I'm a W-2 employee, and commuting from home to office is not deductible. What is deductible is once I leave my office to visit a client or go to a meeting or go to the bank, then that is deductible. So if you have a significant amount of personal miles happening throughout the year and you're using your vehicle for personal more so, then you shouldn't buy the vehicle under the business. You really should buy it under your own name and just track the business miles. And that's what I recommend. Unless you're really buying trucks for your business where you actually need the truck and the truck is delivering, like delivery trucks tend to be very, very big, then yes, those kind of things you want to buy under the business name. And keep in mind, if you do buy your personal vehicle under the business, please make sure it's 90% or more business use for the vehicle, but also keep in mind that the insurance and other things will be higher because obviously it's a commercial loan, a commercial insurance as opposed to just a regular insurance on your individual's name. Depreciation is big. So when you purchase an asset, when you purchase a equipment or a building of some sort, you can deduct it, but it's not deductible at 100%. I think a lot of people buy equipment and they think, oh my God, I purchased this equipment for $50,000 and I can deduct the $50,000. No, you can't. You actually have to deduct it over the lifetime of the asset. So if you buy an asset for $50,000 and the useful life of that asset is 10 years, you can only deduct $5,000 per year. So just keep in mind, you cannot deduct 100% of the cost unless you're using a special depreciation, which we're going to talk about. You can obviously deduct salaries, benefits, and vacation. Just make sure that you're categorizing this appropriately and you're utilizing some kind of payroll company. You can use your home office. You can get a deduction for a partial use of your home office. But keep in mind, it's not 100% of the cost of operating your home. You do have to break out the square footage of the portion that is business in nature. And there's a limitation of no more than 300 square feet. There's two methods that you can use. There's a standard and a simplified method. Definitely speak to your tax advisor to make sure that you're selecting the right method for yourself. Startup costs are deductible. You can deduct up to $5,000 in startup costs, which includes marketing, travel, training, etc. There are some limitations. And keep in mind, if you start a business and for the first 3 years, you're just generating losses, the IRS sees that as possible hobby and not necessarily being engaged in business activity. So you want to make sure that you're generating some income over time. If more than 3 years go by and you're not generating sufficient income, the IRS will audit you and look at that as being a hobby, which we've seen with a lot of clients. We also get asked a lot, should I rent or own? Should I lease? Again, it really depends. I will say if you purchase, you get depreciation, which is great. But sometimes you're financially not at the point where you can purchase and it's better to rent or lease. So it really depends on your situation. Casualty losses, I think is big, especially living in a place like Florida where we're prone to hurricanes and so on and so forth. If your business assets sustain a loss, there is a deduction through the casualty losses. There are some limitations within that. That you have to look out for. The key that I really want to stress is that you just have to make sure that the business expense is something that's necessary and ordinary for your business and you need it for running your business. So for example, I have a CPA firm. How can I deduct a yacht? So if I decided tomorrow to go buy a yacht, many people buy a yacht and say, well, how do I try to figure out and deduct that yacht on my business? And I'm saying to myself, well, first of all, it has to be something that's necessary and ordinary to the type of business that you have. So the IRS can, even if you're going out and you're using that yacht, let's say if I bought the yacht, I went out and I was taking clients on the yacht, the IRS still wants to see that as something that's necessary and ordinary to running and operating my business. I'll quickly go over some of the new tax rules that have come into play that you may be able to utilize that came into 2022. There was a $7,500 tax credit that's allowed if you bought a plug-in electric vehicle. There was some changes after August 16th, but just know that if you bought a vehicle that qualified as an electric vehicle, then you could have qualified for the $7,500 credit. The biggest thing I would say in 2022 is bonus depreciation. So earlier I talked about how you cannot depreciate 100% of the cost of an equipment. However, there is a special election or special depreciation called bonus depreciation, which I think is huge. If you purchase an asset in 2022, you can literally deduct 100% of the cost of that asset. And it reduces over time. I think in 2023, it goes to 80, 60, 40, 20. But the fact that you can deduct 100% of the cost of equipment, they're really trying to encourage people to go out there and buy and to start businesses and to create jobs. And so that's the incentive. Research and development costs. If you're a business, we have a lot of manufacturing people developing products. If you spend a lot of time in research and development, there is a tax credit and a tax deduction that is allowed. We also saw a lot of changes in the partnership and S corp forms. If you have if you file either one of these forms, there's a new requirement to start providing information to the IRS on your international transactions, and that's a new form K2, K3, where you'll start to see that. One of the incentives that the IRS is providing for small businesses or businesses in general to create retirement plans is a startup credit for maybe your IRA plan or 401k plan that you may want to create, which is really great at a time right now where it's very difficult to find employees and you're looking for different incentives and things to attract employees. Creating a retirement plan and give you up to $5,000 in terms of a tax credit if you're able to do that for your employees. So that is the end of my presentation. I think I've shared a lot, I've covered a lot. I'd love to be able to take some of your questions and go from there. So thank you again for allowing me to speak, and I will take any questions you may have.
Jerry, one of the questions that we had is, if you hire overseas contractor, does that impact your taxes?
Can you repeat that again?
If you hire overseas contractors, does that impact your taxes?
Well, yeah, because if you hire overseas contractors and they are needed for your business, right, to generate income in the U.S., then that expense becomes a deductible transaction. So obviously, yes, you just have to tie it to what you're doing here in the U.S. Because we are here in South Florida, we do have a lot of people who do stuff internationally, and I will say, sometimes the activity that they have overseas has nothing to do with the U.S. operation. So you have to be able to justify that it's tied to what you're doing here in the U.S. And we see a lot of problems in that area. Obviously, people sometimes are conducting business overseas and they're trying to use the expenses to deduct the income that's being generated in the U.S. So just keep in mind that you will be audited. And we've actually had a few clients who do operations in Jamaica and Haiti, and as well as Puerto Rico, that actually did a lot of stuff overseas, and they were audited. But as long as they could support that it's for the income being generated here, it's fine. Any other questions?
Feel free to put those questions in the chat and in the Q&A. While you have an expert on the call, it's an important time to ask those specific questions that you would normally have to go to a tax advisor and pay hundreds of dollars just to get some questions answered. So we want to make sure you are taking full advantage of this while Jerry is here. So I think you did an amazing job in terms of being very thorough, because very few questions, surprisingly, that we have currently at the moment. Because you're very, very clear in terms of making sure you keep those records and what to watch out for. So that's extremely important. And then one of the things I also enjoyed, because a lot of people talk about, hey, I want to buy a car and things of that nature, and you address that head on about the car and some of your personal expenses.
Yeah, you got to be careful with that. That's where they tend to use the hobby loss, and the personal expenses is what they use to start the audit. Maybe they see something on the return, and then that's just a red flag, and then they just start auditing everything on your return. And keep in mind, once you go through a tax audit, if there's a problem with the return, they can go back 2 or 3 years. So, and that's not what you want. You don't want a can of worms. You don't open up a can of worms. You definitely want to make sure that you have adequate support to kind of back up some of the things that you're putting on your tax return. I mean, obviously, when somebody's doing your tax return, they're not responsible for auditing your return. So what you bring to me, I mean, I may ask a series of questions, but what you bring to me is what's going to be on your return. I may ask a few questions here and there just to kind of validate what you're saying and to help you along to help build a tax return. But at the end of the day, you're the one ultimately signing the return. So you're the one responsible for it. And make sure that whoever you hire signs off and puts their company tax number on the return. Sometimes we see people paying professionals and they're not putting or signing off on the return. Big problem if you're working with somebody that's not doing that.
Mhm.
I see a question. Can I deduct equipment I purchased 2 years ago? I was going to start the business then, but couldn't. If you purchased the equipment 2 years ago and you can justify it was for business activity that you created 2 years ago because you had to have started a business. And even if you didn't have the business set up as an LLC, you could say that you were a sole proprietor. So yeah, technically you could. If you were engaged in starting a business 2 years ago, you could deduct it, but you can deduct it in the year that you purchased it, which means you would have to go back 2 years ago to the tax return in the year in which you purchased the vehicle or the equipment, and you could deduct it, and you would set it up as maybe a sole proprietorship, and you'd file the Schedule C. But just keep in mind, you would have to have no more than 3 years of losses, because obviously you didn't generate any income, so that you don't fall in the hobby loss rules. And keep in mind, if you do a refund, because you now put this extra equipment on your books, you can actually forward the refund to future years and years that you actually need the refund to offset taxes that you may owe later on. So yes, you could, but I think it has to be worth it. I wouldn't just do it for any piece of equipment, right? To go back and change your whole return. You couldn't deduct it this year. You'd have to go back in the year that you purchased it. Hope that helps.
That was an excellent answer. Let's see.
Well, it
Woo,
depends.
man,
It
this is
depends.
gold right here.
I mean, if I bought a $50,000 equipment and I finally realized that it's something, then, you just have to prove it. Again, it's with record keeping, right?
Mhm.
If you can prove that it was a legitimate business expense and, you can make it work.
And that's the key thing. If you got the records, as long as you got the records and you submit them to a tax accountant and know what they're doing,
Yes.
then they can help you with that.
And I would ask, and when I say records, not just the receipt for the equipment, that's a great answer. That's a great question. I would start having some meeting minutes, right? How do you really have a true business? You had to have some meeting minutes, some strategy, some agendas. You met some people. You obviously you may have been researching it. Create some meeting minutes. I encourage every business to have some kind of meeting minutes every year, just to kind of justify that you actually had a business. I mean, who could prove you wrong? It's about keeping your ledgers and your diaries and your record keeping. So I say create the business of the strategy and the things that you were thinking about for the last 2 years, and say that you were a sole proprietorship, and make sure that you get the tax ID number. Oh, and do not request a tax ID number if you're really not ready to start a business, because once you can request that tax ID number, the IRS is looking for a tax return. And keep in mind, what I see is a lot of people say, oh, I got the tax ID number, but I didn't have any business, so I didn't file a tax return. Well, if you create a corporation and you have a tax ID number and you didn't have any transactions, you're still required by law to file. And what happens is we get people coming 3 years later, like let's use this person as an example, and now they have business activity, but they haven't filed in the last 2 years. Well, you will have to file those returns, and the IRS charges a penalty of $500 or more for not filing on time, and also interest and penalties for not paying that fee on time as well. So if you create a business, you're going to have to file a tax return. So don't jump into it if you're not ready. I see a lot of people jumping in and creating LLCs and getting tax ID numbers, and they're really not ready to really start the business. So I wouldn't start the shell of it just to start it if you're really not going to do anything, because then you add this additional cost that you're not really ready for.
Excellent question, answer.
Well, I'm here. I'm available if there's any other questions. And thank you so much for your time.
Yeah, man, I just had one question as you was speaking. I got so caught up in what you were saying. But I think it was something around what are some questions that people can ask their potential tax advisors to judge whether or not they should go with that tax person? And or what are some questions they should ask the person preparing their taxes so that they know that they are getting the best assessment of their tax savings?
That's a good question. I think when you're looking for someone, you definitely want to make sure that it's someone who has worked on business returns. We find a lot of people, maybe they've been working with somebody as an individual. They've been, they've been an employee most of their working career. And so they're going to somebody for a long time. And then all of a sudden they start a business and they keep the same person. Sometimes you grow out of that person and sometimes they don't necessarily always know how to handle the business side of it. So interview a few people. I tend to ask for references, definitely ask for references, verify other businesses that work with that person. 2, there's a, you can verify EIN. We get an EIN number for your business. Excuse me. Some accountants are certified. You can verify with the trade association, with the FICPA, for example, if they're in the state of Florida, you can verify with them. A lot of people are online through QuickBooks, different providers. You can see if there's any references or any comments about their services, visit their website. It's hard to tell unless they give you a good reference. I would say reach out to some of the references or some of the businesses they work with. That's the best way to see, because most people are not going to show you tax returns of work that they did, right? And maybe just go online and look at some of the reviews that they may keep on their websites. And I think it really is word of mouth. It's a tough thing sometimes, but you definitely want to interview them and ask them, have they handled depreciation? Tell them what kind of business you have, what type of tax form you should file. We sometimes get people coming in and saying, I need to have an S corporation. And I'll say, why? One of your owners may be foreign. If you have a foreign owner, you can't have an S corp, right? So one of the owners is, so you really want to maybe look into what kind of business you have and also see if they have a specialty in your industry. So for example, not everybody is well versed in construction tax returns. Right? If you don't understand percentage of completion method or some of the things that are the small intricate details of working with construction companies, then you may not be the best person to do their tax return, even if you do business taxes. So maybe ask questions in your industry. If you're a manufacturing company, ask whether or not they have experience with companies handling products and manufacturing. Somebody asked a question, or I believe you asked a question earlier about if you have operations overseas. Are they used to handling companies that work overseas? Have they handled transfer pricing issues? So those are, you really have to get into whether or not they understand your industry. Do they have experience doing business returns? And do they have experience doing business returns based on the form that you use? So for example, I think earlier I showed a slide of the different types of business formations. Maybe they have experience working with Schedule Cs, but they're not well versed on the corporate rules. So the corporate rules is a different form. It's Form 1120, while the Schedule C is a basic business tax return. So maybe they can do your return as a Schedule C filer if you're a sole proprietorship or a single member LLC. But as you grow and you scale up, they can't handle the rules of the corporation. So look into the type of company you have set up, the industry that you're in, and maybe look for references. And I think one of the good things that most tax providers provide is a tax organizer. If you go to meet with somebody and they're not having an initial, like I don't dive into doing a tax return for someone, just even when they're referred to us. We want to have a meeting. We want to understand your business. We want to see copies of your prior year tax returns so that we could see what was wrong and what we should continue. We usually give a checklist, ask for a checklist. There's some things that the person should be asking you before you start working with them. And if they're not asking you those types of questions, I don't know if you want to work with them. Like I would need to see the last 2-3 years of your business return just to get a basic understanding of what's going on. Because sometimes people come to us and they say, I just need to file an 1120. Okay, are you sure you're an 1120? Yeah, I think that's what they filed last year. And when you look, somebody filed the 1065. They were supposed to file the S election. The person never got approved for the S election. And they never really transferred to become the corporation, but maybe the son biz, it's so many moving parts. You want to make sure it's somebody who's going to take the extra step and the time to kind of verify or validate what you're saying, because sometimes the business owner doesn't know. And I realize that sometimes they're working with someone and you give so much care and attention to the person that's doing your return, thinking that they're doing everything correctly, that sometimes you don't even look at it. And I think that sometimes a problem. Obviously, not everybody's going to understand all of this, but you really want to make sure you're going to work with somebody who's willing to take the time to educate you and share with you on how to fix some of the ills of the past, and willing to speak with you. So if your tax person doesn't have time to have a consultation with you, then I think that's a problem. And I also think that as a business owner, you got to get out of the mindset of just filing a tax return. It's not just filing a tax return. You probably need some tax planning and some strategy planning. That's what large corporations do, and that's why they don't pay taxes. They have somebody that's doing some tax planning with them in the beginning of the year. Like now, this is a good time to start doing tax planning for 2023 to determine where you should be spending your money, right? And where you can maximize on the tax code. So definitely do some more planning and research in advance, and not just coming to somebody when it's time to do the tax return, because by the time you come to someone and it's time to do the tax return, it's too late. It's too late to really make any major changes. It's really just filing what you have.
All right. Last question you have here, and that was a very good answer. Should I work with a CPA that's not in Florida?
It's a relationship. You work with who you feel comfortable with. That I think that's important. I don't see there's any problem with working with somebody that's outside of Florida, as long as the person has time and attention and the resources. I don't like necessarily always working with one-man show. Let's call it the one-man show. And we all start off somewhere, right? Everybody's got to start somewhere. I know initially when I started, it was just me. Now I have staff, but you want to make sure that it's somebody who's going to have time for you. I mean, if they have a CPA firm outside of the state of Florida and they have the time and the resources and the knowledge, and you have a good relationship with them, I don't see a problem with it. Especially, I think one of the things that COVID has taught us is that you can work remotely, you can work anywhere. I mean, I have people who we work with locally who I haven't seen in over a year, because everything is now online or by Zoom. We're having Zoom meetings. We're not always meeting everybody in person. So I don't think there's a problem with working with somebody who's outside. Just make sure that they know the tax rules of your state. That is what is key. So for example, if you live in the state of Florida and you have operations in New York, you want to make sure that they understand the New York rules. So it doesn't matter where they're located. You just want to make sure that they understand your business, your industry, and the tax rules and laws of the state of where you're operating.
Awesome. Thank you so much, Jerry, for such a detailed and in-depth analysis on maximizing tax savings for our business. We really appreciate you taking the time to join us today. For those that are here in Miami-Dade County and you're looking to get assistance with your business, we'll strongly encourage you to reach out to the Miami-Dade Chamber of Commerce. We have one-on-one small business technical assistance. You can visit our page to schedule a time. And what we do is really to help you prepare. So one of the things that Jerry talked about is having your back end together and your bookkeeping and record keeping together so that you can make your process of maximizing your tax savings a lot more easier. That's one of the things we'll help with, is helping you figure out what you need to do to get your books together so you can be prepared to go to someone like Jerry and Tri-Merge CPA to get your taxes done. So that's part of our Community Navigator Program. This technical assistance program, along with our technical assistance workshops, are part of what we do on a regular basis to help and provide that. So the next slide, you will see the workshops that we do on many things, from accessing capital to government contracting to cybersecurity. These are all part of our workshops that we do on a monthly basis. So you can go to www.m-dcc.org/events to check out our series of events. Now, one of the things that you can come to that's on the next slide is our small business meetup. It is an amazing opportunity to really meet with 20 to 40 other business owners, some that are just starting in business, some over 20 years, those that are over 20 millions in revenue, small, and also many of our partners come on. And you can have an informal discussion where we can talk about what's going on. We have topics ranging from how do you deal with a disgruntled employee to what are your bookkeeping efforts? How do you do that? And you get to hear from different business owners in different industries, different stages, really share what they're doing to really benefit from their business. So this is completely free and open. And so you can go to our website, our events page, and sign up. And whenever you want, like this is something we started during the pandemic where we met every single day on Zoom. And many of our business owners were the first ones to get the PPP, EIDL, Google grant, Verizon grant, Comcast grant, because they were on this call and they heard about these resources. And whenever opportunities come on, we bring those. So literally for the past month, 2 months, we've had the director for the Miami Open for Business grant opportunity, Comcast, Comcast Rise grant, the Mom and Pop grant, the MD grant, the directors coming where you can ask questions to them in this call. So I strongly encourage you to join and sign up for our small business meetup on Tuesdays at 4 o'clock. And this is one of the many events that we do as a chamber. On our next slide, you will see that we have our major events of the year. Our logistics and supply chain is part of our annual symposium and business news luncheon. We're going to have like the director of Miami International Airport, Port of Miami. We're looking to get the Secretary of Transportation and a few others to really talk about the boom in logistics and supply chain that's happening all across the nation. And there's so many, it's a multi-billion, trillion-dollar industry internationally and locally, multi-billion-dollar industry. And you'll get to learn what's happening and what's going on. And our Women's Business Council has the annual Little Black Dress and Pearls, like the who's who of women in business and government. So these are all opportunities you can take advantage of. If you ever have any questions, feel free to reach out to us. You'll see our contact information on the next slide, where you can reach out to us here at the Miami-Dade Chamber of Commerce and also our Business Navigator Program. So I want to thank you for joining us today. This recording will be online, so you can always refer back to it. I want to give a shout out to, I think, Mina Green in the chat. He did an otter recording of this, and I see these notes on here. So we are definitely going to look into that, Mina. So definitely reach out to us so we can get access to that transcript. You tell us more about that function. But thank you very much for joining us for this technical assistance program. We are here for you. Reach out for help. Too many business owners do not reach out enough. As a part of our SBA Navigator program, we are here for you. And we need you to reach out to us so that we can help you. We have funding, we have resources to help you take advantage of all these opportunities. So again, thank you for joining us, and thank you, Jerry and Tri-Merge CPA. Make sure you reach out to them. As you see, she has a wealth of knowledge to make sure that your business taxes are taken care of. So thank you for joining us, and we look forward to seeing you. All right, take care.